Good morning, everyone. Hope you're all doing well. It is Monday, January 22nd. We're back in action. Hope you all had a good weekend. Good last week. Last week was a short week, wasn't really too active, but we're back in it. And it's in the end of January, right? The first month of the year is pretty much over. It's going to be over next week. And we continue, right? We keep riding through this. So, the earnings period is starting off, right? It started off about 23 companies have reported earnings so far, and we have a plethora more, and I'm talking about the S&P 500. So, this week we started off with big tech, starting off their individualistic earnings periods as some of the Mag 7 members, right, Tesla and Netflix are going to come on, and we'll also have some snapshots of semiconductors with ASML along with Intel as well, and more sectors will also be on display. Industry heavyweights disclosing their performance, right? Defense, we have Lockheed Martin, Raytheon. In telecom, we have AT&T and Verizon. Financials, we have Visa and American Express. And then consumer goods, we're going to be looking at Procter & Gamble. Healthcare, we're looking at Johnson & Johnson. Travel, American Airlines, United Airlines. Then real estate, we're looking at Dr. Horton. Industrials, 3M, Caterpillar, and General Electric, and more to come. So a lot of eyes are going to be on the Mag 7 starters, right, with Tesla and Netflix. Tesla's been beat up most recently, but it looks like a decent long opportunity to start the week as the market has been just chugging into new all-time highs continuously as we closed Friday on quite the ripper. So we'll talk about what we're looking for in terms of the equities, especially the S&P 500 futures, to start off the week, and we'll go from there realistically. But all in all, as I look at this, hold on, I just got to press a button so this monitor doesn't shut down. Okay, sorry about that, but all in all, this week we start off with some of those earnings that can shake things up. We've seen markets rip into all-time highs. We're about to open into a new all-time high as Sunday evening session, and pre-market has been rallying quite aggressively here. And it's going to be hard to continuously try to short this, right, as a lot of people have been realistically, right? This thing has been continuously rallying and rallying. We're through new distributions block, and we'll talk about that in just a bit. But like we're talking about with earnings to begin with, the S&P 500 companies are expected to rise 4.4% year over year in the fourth quarter, according to data from LSEG, which should provide additional optimism for the market. And the S&P 500 even hit a new all-time high record on Friday into the close, with things looking pretty good for the economy, along with solid profits and margins that are being driven by strong spending. AI is boosting valuations, employment is low, rates are starting to come down as well, and many geopolitical tensions on the world stage have not so far directly impacted the American consumer. Another thing to add about that is that Federal Reserve last week, right, Waller came on the wire, and there were pretty big shifts that came into the rate expectations, especially in March. There was about a 65% chance that this year, 2024, would see 7 rate hikes in total. But after Waller's speech, there is now a 13% chance that those 7 cuts will materialize. I don't know if I said cuts or hikes the first time, but I meant cuts. There's also now a vastly decreased chance that we're going to see rate cuts in March, when we were expecting to see our first rate cut of this cutting season. So we talked about inflation before, inflation being cyclical, and we'll see how that transpires. But if they start cutting a little too soon, it puts pressure, right, on inflationary aspects in the coming quarters. So as we look at this, at the end of the day, it appears that if corporate earnings keep up with expectations in 2024, the market will continue to rally, or at worst, trade sideways. This is what a lot of investors and analysts are looking at. It doesn't necessarily seem that these corporate earnings are going to dump expectations, right, and get destroyed, pulling down the market. I think that's going to come from something more seismic that comes from the Federal Reserve monetary policy as well as inflation. So, there's caution that risk could materialize if earnings guidance starts to waver. Remember, it's hard to trade earnings, and the sentiment can be disappointing. Beats and misses are not always indicative, because the main thing to look at is going to be guidance, as is always the case. Forward guidance is what people look forward to, what they expect, and how they expect the market to move, right? Misses and beats don't drive the prices in essence, so just keep an eye out on that. Investors have also been hanging on to every word that the central bank policymakers have been going through. We have an upcoming meeting that starts on January 30th, but the official rate decision is going to be January 31st with a speech from Fed Powell, and that is next Wednesday, actually. So there's going to be two noteworthy pieces of economic data this week that could set up the path for future rates. GDP, I think it's GDP for the fourth quarter, will be published on Thursday pre-market. The expected expansion is 2% versus 4.9% in Q3, and the Fed's favorite inflation gauge, the core PCE index, comes out pre-market on Friday. So with some of the other news here, we can look at the cryptoverse. We can look at a few different things. Some New World Order with Russia and North Korea that are working towards establishing a new multi-polarized international order to defend their interests amid efforts to build a united front against the United States. And the deepening of ties follows North Korea's foreign minister Cho Sun-hui meeting with her Russian counterpart Sergei Lavrov and Vladimir Putin in Moscow, and follows a similar effort by China and Russia. So tensions have been escalating in the Korean Peninsula, with Kim Jong-un ramping up weapons tests in the U.S., South Korea and Japan responding by strengthening their combined military exercises. So the moves also come a week after the UK Defense Secretary Grant Shapps declared an end of the era of the peace dividend. In terms of crypto, right, we've seen crypto pull back recently, especially with Bitcoin. The cryptoverse is witnessing yet another failure with Terraform Labs, the company behind the cryptocurrency collapse, Terra and Luna, filing for Chapter 11 bankruptcy in the U.S. So Terra USD, along with sister token Luna, failed in 2022 after a stablecoin lost its peg to the dollar, wiping out an estimated $40 billion in market value. So Terraform Labs, which is already facing fraud charges brought on by the U.S. SEC, is also expected to face class action lawsuits in Singapore, while the company has repeatedly asserted that Terra USD and other tokens it issues are not securities, and the SEC as well as judges in recent rulings do disagree. So as we kind of shy away from the news that's been going on, we can look at the individual equity market here, right? The S&P 500. So good morning, everyone. Just saw this chat. Hope you're all doing well and ready for the week ahead, a full week in the markets yet again. But I'm looking at the S&P 500 here on my screen. This is a volume profile breakdown, and as you can see, we've most recently expanded to the upside outside of this larger distribution that I'm kind of circling here. It's very difficult to time highs and short continuously as markets are ripping. It's more painful than not. Realistically, as it stands, right, the overnight lows, I don't fully know what they are. We can check here. Around this like 73-ish or so are going to be the first viable region where I think longs are going to try and hold prices out. Another area is going to be that like mid to low 60 on the S&P, so 48, 62, 63 is going to be a barrier that's going to want to stall prices out from dropping through and accepting into the imbalanced area to clean up this auction. So that's the best case for the bulls, that they pick it up about 10 and 20 points lower to continue this rally. Otherwise, the auction gets cleaned up and we could start to see more of a reversal realistically. That's pretty much what the only thing I'm looking at. As it stands right now, we're about to open above a lot of key areas, which puts us in the bullish driving seat. But I don't want to just blindly be on the long side realistically off the open, right? I want to allow for any kind of pullback to happen if it's going to happen. If it doesn't, that's fine too. But I think that there's more, there's a higher opportunity to pick up an auction lower than it is to try to buy these highs right now. But we are in a buy the dip territory, so I want to be very, very cautious. of the potential downside to come, right? It seems less viable, but the only reason for me to be short today is if we start really running under that 48, 62, 63 area to clean up the auction below, which can take us another 20, 30 handles to the downside. Other than that, right, I do want to stick to the long side. I'm going to be looking for some of these upside momentum movements to bring us up to 4,900 so we can tap that nice round figure and we'll see what happens there. So yeah, I think that low was printed pretty much off the overnight open, and then we just started rallying from there. Where the high was, I don't know what the high was either, to be honest with you, but 90, right? So the high at 90, trading 10 handles away from the 4,900, very, very close. We might as well go and tag it. So that's all I have to start this Monday, start this morning, start this week off with you guys. And what we're going to be doing is doing this for the rest of the week, but we're going to be opening up our live trading room today. Let's look at some other assets in there that I find interesting, and we'll go from there. Check us out at TRADEPROacademy.com, and I'll see you guys